America's housing market is frozen. Outdated tax policy is keeping millions of homeowners stuck. The capital gains exclusion on a primary residence hasn't been updated since 1997, when the median home price was about $129,000. Now, it's more than $419,000. Over 13 million homeowners would exceed the cap if they sold today. The result? Fewer homes on the market, higher prices, less opportunities for first-time buyers, families, and seniors. The More Homes on the Market Act would modernize the capital gains exclusion by doubling it and indexing it to future inflation. More homeowners could move without facing massive tax penalties on their home equity, which means more homes, more mobility, and more opportunity. Realtors are members of the National Association of Realtors.
Welcome back to my YouTube channel. I'm Amber Nestor. I'm the firm owner and founder of TennesseeLandAndHomestore.com. That's TennesseeLandAndHomestore.com. And you can contact me by text at 865-617-4783. You're looking at part of a preview screen of my homepage for my website there. Let's talk about what this video means, because honestly it's really confusing. I think the idea behind the video when the National Association of Realtors created it was to make a quick 1-minute snippet of information about this topic. Something that's really fascinating to me about real estate as a profession is the general public doesn't know just how much we're involved in advocating for them in so many different ways. And so we have the National Association of Realtors, we have the Tennessee Association of Realtors, and then we have regional local associations. One of the largest ones in the eastern half of Tennessee is called East Tennessee Realtors Association. I'm a member of the local, state, and national. And let's get into this topic. Let's talk about it a little bit. I would also like to throw out a disclaimer. I am not a tax attorney, and there are many tax strategies out there. I will tell you really quickly that many factors can impact capital gains taxes. And some of the strategies that my clients over the years have told me they've utilized include, but are not limited to, the following. Things like 1031 exchanges, and all of these are ways to avoid completely or to reduce capital gains tax obligation on the profit from a real estate sale. Okay. So 1031 exchanges, putting the property deed into an LLC or a trust, putting the length of time you own the property, the type of property that it is, expenses incurred in improving the property, and just on and on and on. Okay, so there's lots of ways, there's lots of things that can help reduce taxable income, taxable profit, capital gains tax, and even eliminate it altogether. I think 1031 exchanges are one of the coolest things, but they're kind of complicated, and the rules with those can change from year to year. You need to speak with someone who specializes in that when you're creating your strategy. So let's say you have a property, you want to sell it, you want to immediately turn around and use all or part of that fund to buy another property. That way you are growing your wealth and hopefully totally avoiding any capital gains tax. This has been something that's been utilized for many years by many people, but there's all these little rules that go with the 1031 exchange. There's a rule about how much time is allowed to pass before you make that next property purchase, all these little intricacies. So they have people who their job is to be experts in 1031 exchanges. So what you would do in a scenario like that is you would hire me as your agent to help you list your current property and find and buy your next property. And I would be collaborating with your 1031 exchange expert to make sure that we had an itemized list of the things we had to do to qualify to make all that come together. Okay. So let's talk a little bit in 3 little sections about the video we just watched that's about 1 minute long, and kind of explain some common misconceptions about what this legislation could potentially mean, what the goal is behind it. It's kind of interesting. I'm going to be moving through this really quickly today. I'm way behind schedule, and so I want to just get this quickly created, put it out there in case someone finds it interesting. And again, quick disclaimer, I am not an expert on this legislation. The 3 sections of data I'm going to discuss is what I believe to be true, but I could be incorrect, okay? So this is just speculation. If there's error here, my deepest apologies. Okay, so when the National Association of Realtors talks about doubling the capital gains tax exclusion, they're generally referring to doubling the amount of profit that you can exclude from federal capital gains tax when you sell your primary residence. They're not talking about doubling the sales price itself, okay? So here's how the current law works. If you're a single filer on your taxes, you can exclude up to $250,000 of capital gain. Okay. If you're married filing jointly, you can exclude up to $500,000 of capital gain. The tax is based on your gain, not the home's selling price. So capital gain is equal to the selling price minus adjusted cost basis. Well, what on earth is cost basis? Your adjusted cost basis generally includes things like what you originally paid for the home, qualifying improvements like a new roof. Sorry about that. Let me pause that. I think that's a new client. Okay, I have them scheduled and squared away for follow-up. Okay, so where were we? We were talking about the things that are generally included in that adjusted cost basis. So just think costs, okay? So new roof, additions, kitchen remodels, etc., certain selling expenses, okay? Again, these are things that you need to go over with your tax specialist. And I highly recommend you seek out one or maybe multiple specialists. You want to find people that are experts on this niche of tax issue, okay? It's really hard to find somebody good. It's hard to find people you can trust. So I feel for anybody that's trying to do it, honestly. So what NAR is advocating, what NAR is fighting for, NAR has supported increasing the exclusion to $500,000 for single homeowners instead of the current $250,000, and $1 million for married couples instead of the current $500,000. The reason is that these exclusion amounts were established way back in 1997, and they've never been adjusted since then for inflation or rising home values or other factors. So many homeowners who have lived in their homes for decades have accumulated far more appreciation than the current exclusion would cover. So the National Association of Realtors argues that this discourages people from selling their homes because they might face a significant tax bill, or maybe they're afraid that they will, or maybe they're uninformed about the ways that they might strategize to avoid or eliminate those costs. So they argue that this reduces the number of homes available for sale, and it contributes to a lower inventory and also to higher prices. So let's look at an example. And again, I want to say again, disclaimer, I'm not a tax attorney. I'm not an expert on this legislation. These are my assumptions. These are my speculations. I could be completely and totally wrong about any or all of this, but I'm hoping that I'm on the right track. So I thought it was an interesting topic to discuss. I think the biggest takeaway here is that there are just so many things that realtors are doing nationwide, statewide, and locally to try to advocate for a healthy housing market. And it's just an aspect of being a realtor that most people don't know happens. We pay thousands of dollars in fees every year, where I'm at bi-yearly, to contribute to these different levels of association that help advocate for the public. So the field of real estate is just so important to a healthy housing market. All right, so let's look at this example. Suppose you bought a home for $200,000, then you sell it for $900,000. After accounting for improvements and selling costs, your taxable gain is $650,000. The current law, if you're married, has an exclusion of $500,000 with a taxable gain of $150,000. If NAR's proposal became law, the exclusion would be $1 million, which means your taxable gain would be zero. Okay, so that's a big difference. Very helpful. So the proposal is about raising the gain threshold, not changing like a selling price at which a tax begins. Okay. So anyway, I hope you learned something new. I hope that I'm right about this, not totally on the wrong track about this, but it's a really interesting topic. There's so many factors that go into property purchasing and property selling. You know, one of the really cool things that I learned about real estate after I started to get deeper into the field in my younger years was how some people like move around a lot, or they trade. It's kind of like they're trading property. So in areas like East Tennessee, where we have so many beautiful waterways and so many beautiful mountain ranges and just so many nice places to be with great weather and low property taxes being like your county property taxes that you pay yearly. That's totally different from capital gains taxes that you would pay through your tax filings, your yearly tax filings. Okay, but there are a lot of people who maybe they want to move to a different part of East Tennessee and stay there for a year or two. Maybe they want to have a vacation home by Douglas Lake, and then in a year or two they'd like to have one over on Watts Bar Lake instead. Maybe they want to switch up their Airbnb properties. Just all these different factors. This particular legislation seems to be focused on primary residences. I'm curious if it carries over into other properties like second homes or vacation homes or income generating homes or long-term or short-term rentals. I'm really not sure, but that would be super cool, right? But anyway, there's a lot of property that they can potentially revolve ownership, change ownership. And I think the Association of Realtors believes a really healthy real estate market is where people can kind of just be moving and shaking all the time if they want to or need to. If one thing that I've come across is, how challenging it can be when someone needs to relocate for work unexpectedly, or maybe they just want to pursue a career and it's on it's 2 counties away. And then what are you going to do? If you're struggling to sell or struggling to buy, or you're being overtaxed or whatever it may be, whatever the factors are at play there, it's really important that we are eliminating and making fair costs that we perceive to be excessive currently in light of all the factors of our current economy. So people being more mobile, people being able to move, people being able to buy and sell, people being able to change plans quickly and easily is a very valuable factor for a very healthy housing marketplace. That's all for today. I hope you check back to my YouTube channel. I am doing all different kinds of topics all the time. You just never know what's going to pop up on my YouTube channel. Today is August 7th, 2026. It's 3:28 p.m. Eastern. If you have a question about buying, selling, investing in property in the state of Tennessee, or maybe even elsewhere, contact me at 865-617-4783. Again, that's 865-617-4783. Have a great day.